Let me also welcome on board Ruchit Jain, who is joining us on the show right now. Hi, good afternoon, Ruchit, and thank you so much for your time. First up, help us with your take on the markets, because after those initial hours of volatility, we are quite range bound for Nifty as well as Bank Nifty. But where do you see the index headed? What kind of a data is shaping up, suggesting moves for the last half an hour and beyond?
Yeah, hi, very good afternoon. Well, if you look at the broader trend for the markets have been positive with high top, high bottom structure continuing on the Nifty. And importantly, recently, the dips that we have got in the month of May, initially in the first week of May, we got a pullback move from 24,600 to about 24,100. And again, during last week, we saw a similar pullback move of 5 to 6 trading sessions where the markets corrected from 25,100 to 24,500. Now we can see that this both these corrections which were there in the month of May lasted for about 4 to 5 sessions, and the 20-day exponential moving average support was not breached, which acted as a support. So I think till this is intact, we would continue a gradual up move in the market towards 25,250. So it remains a buy on dip market, and any kind of big dips that we get in between should we use as a buying opportunity, and we expect 25,250 to be tested in this week itself.
Right. Okay, stay with us. Lots more to discuss when it comes to the markets, but let's just focus to an important story for now. And it seems that with the onset of early monsoon across states now, the power demand has taken a sharp shift, recording a dip of nearly 11% already over the last 10 days. Let me take it across to my colleague Prakash and get in more details here.
Yes, there's a decline in power demand due to change weather conditions thanks to heavy rains and thunderstorms in various areas. As per the Power Ministry's data, peak hour power demand has been reduced by approx 11% in the last 10 days. Peak hour demand has been decreased to 198 gigawatt on May 25 from 221 gigawatt on May 15. Along with that, the government has met roughly 200 gigawatt power demand during the day on May 25 as compared to 230 gigawatt on May 15. Along with that, UP registered the highest power demand at 27,400 megawatt, followed by Maharashtra at 22,495 megawatt. Along with that, there is no power shortage across the country during peak hours. A significant growth in power generation from various sources such as thermal, solar and wind energy. However, as per the Power Ministry's statement, peak hour power demand likely to cross 270 gigawatt during ongoing summer season. The government has already prepared an emergency plan to meet any surge in power demand during June and July.
All right, thank you so much, Prakash, for giving us all those details. So a 10% fall in the power demand in the last 10 days is what we have witnessed. But Ruchit, just wanted to have your take on the power stocks that are maybe reacting to this news, because I can see that stocks like Tata Power, Adani Power, they are at the days near the day's lowest point. Do you believe that these stocks can witness a bit more correction even from these levels? What are the charts telling you?
So on the charts, it is indicating that we would see more of a time-wise correction rather than any significant price-wise correction in the stocks. Tata Power has already seen a good price-wise corrective phase along with the broader market since the month of October to mid-February. But since then, it has seen some consolidation, and that consolidation could still continue going ahead. So yes, because of these news flows, we may not see a run-up move in the stock, but at least not expecting any significant price-wise down move as well. So at the most, no, I think no, we would see some time correction in the stocks in the near term.
Right. Okay. That's the take coming in on some of these power plays right now. So, that's exactly what we're picking up when it comes to the power space. But, just wanted to get your sense as well, Narendra, on the entire power sector right now, because one is seen as to how a Tata Power to a Power Grid to financiers like PFC, REC have shaped up all through past year and, so far this year in the market correction that also played out. But where is it that you think there is value to buy afresh?
I think this is transitional in nature. Whenever monsoon hits, there is some moderation in the peak demand, but I think overall the sector is poised to grow. There is huge opportunity for power sector to grow, and I think for next 5 to 10 years we are poised to grow at about 5.5 to 6.5 percentage CAGR for power generation. So this is a very good growth, and hence I think the long term still remains intact for the overall sector, and there's no doubt about it. And in the current scenario, I think we like JSW Energy very much right now. And of course, the power grid and distribution, and a few of the transformer companies like Transformer and Rectifiers India Limited. So these are the plays within the power sector.
All right, so that's the take coming in on the power space, both technical as well as fundamental aspect as of now. But with this, let me also welcome Aditya Agrawala, who is joining us on the show right now. Hi, Aditya. Firstly, help us with your take on Nifty Bank rather, because that index is more volatile in today's trading session in comparison to Nifty 50. At one point in time, we did see the index drifting in the red as well. So Aditya, which are the levels that you're watching out for Nifty Bank, and what sort of a move are you anticipating?
Hi, Srishti. Good afternoon. Thanks for having the show. It's more of a consolidation, I would say, both on the Nifty and the Bank Nifty, between 56,000 on the upside to about 54,500 on the downside. While Bank Nifty does shows more promise as far as outperformance is concerned. But again, I'm keeping a close eye on the VIX. That is something which is still not at a comfortable position, which is not letting market go one-way rally on the upside, which is why we are witnessing that kind of a volatility as well. So till the time the volatility index actually slides below the level of 16, my sense is we are going to see this kind of volatility continue in the equity markets, at least on the Nifty and the Bank Nifty both. But I don't see too much of a correction as well. So both the indices, I think, will remain locked in a range. If you're looking to go long on Bank Nifty, maybe look to go long closer to about 55,000 with a support at 54,500. And on the upside, you can see levels of 56,000. On the flip side, I think around 56,000, you will see profit taking again, and markets can slide gradually down to 54,500. So till the time VIX actually slides below the level of 16, I think, Srishti, this range is going to continue, and markets will remain choppy and volatile within this range of 56,000 to about 54,500. For the Nifty, as far as is concerned, 25,100 to about 24,400 on the downside is the broader range in which I think Nifty will also continue to oscillate.
Just two stocks that I want to bring up for you on your screens. A, of course, Divi's has been quite the stupendous mover from the word go. They've announced another agreement with a global pharma company to supply advanced intermediaries. There's a capex investment of 6.5 to 7.5 billion rupees funded via phased advances from the customer itself. And remember, this is their second order win that they've seen so far this year. So the street is quite excited about that. On the flip side, there's Balkrishna Industries. While their results are, below estimates, what they've announced that's making the street a little cagey is the diversification. Into the passenger car radial segment and the truck and bus radial segment as well. Even though the management noted that there are product-related synergies with the existing business, the street seems a little cautious about this extension. Narendra, how are you viewing these two pieces of news when it comes to both Balkrishna as well as Divi's?
Yeah, for Divi's, I think it's positive, and definitely the results are also largely in line. And coming to the order win, I think we look positively forward for the company, and it would also add to it. However, coming to the PKT, I think the new announcement which they have made is actually very low in margins front, and we believe that it would be dilutive of their operating margin as well as profit margin. Hence, we might see some multiples coming off a bit, which we might have also seen in the price reaction today. And going ahead, also, I think it would have some impact in deterioration of some profitability margins because of this. So definitely some premium multiple from out of maybe a kind of offer on 3 to 4x kind of things going ahead for the equity.
right, but Narendra, since we are just talking about the tire space, give us some sense that what is your pecking order in this space? Because the reason I'm asking is because a lot of these experts do believe that the bottom for the margins are in place. Well, Balakrishna is in focus on the back of a separate news, but given the fall in the rubber prices and the anticipation ahead, the crude oil has cooled off. We have seen stocks like JK, CEAT, Apollo Tyres reacting to this particular news flow. So give us some sense that which are your top bets within the tire space and your favorites.
I think CEAT and Apollo are the two preferred, and after that, MRF is the second best for us.
All right, CEAT and Apollo, those are the top favorites when it comes to the tire space. But with this, viewers, it's now time to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
If you like this video, then like, share and subscribe to ET Now.